Good morning. Today is Tuesday, January the 3rd, 2023. This is the second day of the new week and in terms of trading. And overnight, there are only a few markets that are open. Effectively, the UK and US market, two major markets, are not open. So the market outlook does not change dramatically. In fact, there's hardly any change in views. And we can see that the Dow Jones actually closed. Let me see. Hang on. I've got to change my chart here. I'm so sorry here. But the Dow Jones actually closed on a relatively firm note on the last 2 days of trading into 2022. And we can see that that momentum could well carry forward into this week's trading. So we will have to see what the market will do tonight on Wall Street, whether the late buying coming in on the last 2 days of 2022 can actually see a sustained rally going into the first 2 weeks of January. Okay, so that remains to be seen. And of course, that if we get a more robust rebound, we may actually see even the possibility of challenging the December high at 34,712 in the Dow Jones, but that is premature. We will have to see how the market reacts going into this week's trading. Okay, over in the S&P 500, the rebound that may happen in Dow Jones may not be replicated in the terms of the magnitude of the rise, because the December high at 4,100 seems to be a little bit far away compared to where the market is right now. It's at 38,400, 3,840 points here. So maybe the best we can hope is maybe a 50% retracement, maybe up to 3,935 thereabout. Okay, there we will have to again watch out. But my bias is still to the downside, very much in line with the weak economic data that we have been seeing all around. And over the Nasdaq, obviously, if we get any kind of rebound, this will be the weakest rebound among all the major equity index, because the Nasdaq 100 so far has over the span of 2022 has proven to us that it is the weakest link. And the fact that it actually closed not very far away from the year low at 10,440 is testament to the fact that it is basically quite weak. So if any rebound comes again, I think it would be very good, considered very good if it can rebound to 11,500 levels. Okay, but thereabout, do look out for signs of weakness, because I think the market bias is to the downside. Over in Asia, we can see that the Hong Kong market actually has stabilized somewhat. The market opened low and subsequently closed high. And of course, this is only late morning. We still have to see how it performs throughout the day itself. If Wall Street actually managed to recover a little bit more, maybe it would have enough momentum to take the Hang Seng beyond the 20,100, which is the high traded last week before the market eased back a little. So even if the market takes out the 20,100 levels, we will have to contend with the 20,300 levels, which is the August high. So by and large, I think the upside remains, but I think it's quite limited. If the market do convincingly take out the near-term support line here, then I think the market is geared, is prepping to come off. Okay. Over in the Shanghai Composite, we can see that the market actually opens low and actually traded low before it rebounded up to this moment in time. And I think upside potential is possibly up to 3,135. Again, very, very shallow retracement. We can see that this is likely to be a three-wave rebound, and all three-wave rebounds are considered to be corrective in nature, and the market bias is still to the downside. Okay, the Nikkei 225 again did not go according to what the China and Hong Kong market is doing. Is actually coming off, and the current price is at 26,000 levels. Okay, so that is not very far from the low traded in December last month. Okay, last week in fact at 25,953. So we are actually on the lower end of this spectrum, and there's every likelihood that it will continue lower, maybe to even challenge the October low, which is at 25,621. Okay. Over in currency, we can see that the dollar yen actually went down and take out a major point. In my as far as I'm concerned, the market has taken out a major point, which is considered to be 130.39. Okay, 130.39 has been very crucial to me, because based on the daily time frame, you can see that now I refer to the daily time frame, beginning all the way from the pandemic low at in March of 2020. This bull run that has been running for more than 2 years has effectively ended this morning. As far as the daily time frame is concerned, that level is 130.39, which is this level here. It has been taken out, and so in my view, as far as the daily time frame is concerned, the bull run back has been broken. But that does not mean the market is going to come all the way down, because the fundamentals does not support the idea that we can see further weakness in dollar. There is no strength in the yen other than other than a technical breakout. So in the face of no fundamental or poor fundamental to support buying dollar against the yen, because at the end of the day, we still have to contend with the idea that Bank of Japan still keep interest rate at negative, whereas the Federal Reserve is still going to continue the high interest rate. Just this alone, the interest rate differential will see further weakness in the yen rather than strength in the yen. So do not go in and sell at this current point, and God forbid, do not buy, because we have to wait for the market to stabilize and then give us a new direction. What I can say is that the bull market from the low of March 2020 is effectively broken as of this morning. So we will have to wait for new pattern to emerge and see where the market takes us. Okay, so maybe the direction for the dollar is not very clear going forward for dollar versus the yen. In the sterling versus the dollar, the market basically is not doing very much. We will have to see what London does later on in the afternoon. If there's going to be a bounce back to 121 mid-range of 121 to 122, I think that is an area that is quite vulnerable to the re-emergence of selling interest. Possibly the market will bring down this pair of currencies all the way to test 119 to even 118. Okay, so basically I think the market may have enough room to come back off. Whereas the euro versus sterling, we can see that towards the end dying hours of 2022, we can see the market actually rebound by 107.10 13 levels before it eased back yesterday. And in my mind, this market is actually quite attractive to go counter trend. Market has been up, but I think there is the possibility the market may not be able to significantly cross over the December high of 107.35. Okay, so that setup that does look to be a quite attractive setup to go short. Okay, we want to see if there's going to be any reversal as the market progresses in the day itself. Okay, but this is a market which I think if it can break the near-term support line, there's a potential for the market to go down to all the way to 102. Okay, the low here is 102.23. Okay, of course the market will not go exactly to the price, but I think the downside potential does look relatively good. Okay, the Aussie versus the dollar, now as you can see at this hour inside, the market is going back to challenge the high for yesterday at 0.6820. So if this is the case, we still have to look out for possibility that this support line offers. If the market does for whatever reason take out this support line, then maybe the dollar is going to go higher and all other major currencies is going to unravel. Target for this move is still at 0.66. Okay, we look at dollar versus Canadian. Now this is where I think the dollar strength is pretty obvious. Now this goes in against the grain of dollar yen. Dollar yen seems to be, in terms of dollar, is coming down, whereas in dollar versus Canadian, it does suggest that the market may want to go up. So again, there is this contrasting view, although those are both currency pair with the base currency in dollar are showing a totally different direction. So for the time being, maybe we should just stay away from the FX market for a while and just observe until the dollar have a very dominant trend that emerge. Okay, so for the time being, I'm still favoring dollar to go up, and that means all other currencies to come back down. Okay, over in crude oil, we can see crude oil actually yesterday the market did not quite open, and the market actually closed on Friday itself at a high note above $80 per barrel. But this time, this morning, we can see market pulls back $1 to $79.53, and that does not suggest weakness. In fact, I think the market is taking profit. All I can say is that the upside potential the prospects of taking up the $81.18 high is quite real. But again, having said that, I think the top side can be quite limited to $83. If the market can go up to $83, well and good, because there's a high here at $83.34 in December. So maybe the market is going to gun for this level. I have already gone long at $78.10. I hope to get up at $92.95, just below the $93 levels. And if that failed to see the market surge beyond $83.34, it may actually have a chance to pull back and retest the $76.80 level. So this market is likely to trade within this price channel here. So we want to watch how price react. as the day goes by. Okay, over in the precious metal, we can see, oh, okay, now very good. We can see that the gold prices continue to edge higher as we are speaking. It has taken up last month's high at $1,839, $33.30. This morning we have a higher $1,839, almost $40. So we can see there's a surge going on as we are speaking. So that means underlying the gold strength and the precious metal market strength is still very much in evidence. However, if my view is that the dollar is going to go up, then obviously whatever gain that we can see in precious metal could be temporary. So if the dollar comes back up again, gold will have to come back down. Okay, so do watch out for this dynamic. If the dollar continues to go down, like what we see in dollar yen, then yes, gold is gonna go up. Okay, so between the dollar movements and the gold market, we have to see how the dollar reacts. Okay, because everything is going to be dependent on where the dollar is heading. If we take the view that dollar is going down basis the dollar yen, then yes, then gold prices and silver prices is going to go up. But however, if we take the other view that dollar Canadian is going to go up, it means precious metal is going to come down. So again, a bit of a mixed bag here. Do have to watch out. Now for silver, we can see the silver as lately as of now has been challenging the upper end of the move to $24.25, not very far from last week high of $24.30. So it may actually go higher. Okay, so we will have to watch this move here. Now, as far as cryptocurrency is concerned, nothing really much is happening. Market has been very, very quiet. Bitcoin is just marking time. Upside potential at best is $17,320, but downside remains to be seen. Okay. Ethereum also do not have a very, very big move, although there's a bit of a retracement going on. Top side is about $1,290 at best. Okay, so do watch out for this potential there. However, the move happens to be in Ripple. So you see, Ripple prices has actually come down quite a fair bit. Okay, hang on. Cancel this. Now, Ripple has a massive rundown yesterday to 30 cents, just under 30 cents before we see a very sharp rebound. And this rebound has taken the price of Ripple back to above 35 cents, okay, 35.5 cents. And now at this moment, we can see a bit of a pullback. If the market can pull back 50%, maybe it's worth our while to consider going long. But again, upside potential could be limited to this sloping resistance line. So if you look at the risk reward, it's not that great a big deal. But if market can continue to go lower, maybe down to, let's say, the 38.2% retracements, maybe that will make it worth our while to consider. Okay, so if the market can go down to 32 cents, 33 cents, maybe it does makes the odds a little bit better. But again, based on risk reward, it's not that fantastic a setup. Okay, Binance coin is practically flatlining. There is simply nothing to cause the market to move either way. So basically for time being, just stay out of Binance coin for time. Okay, and then the Dogecoin, I've never been a big fan of this particular token since it has no utility whatsoever. The market is basically moving in the whims and fancy of what Elon Musk said. So basically, this is not a good way to trade. And Cardano seems to be coming back alive, but again, the upside potential is very limited. Each time we can see the high is getting lower and lower and lower. So this is definitely a symptom of a very weak market and definitely no reason to go back into buy. Okay. Solana is the other coin, the other token that has a big move. Just going into the end of 2022, we can see the market dropped down to $7.96, and then it rebounds very strongly back to $12 before it eased back off. So something is cooking in Solana. Okay, so maybe this is a symptom of a reversal because this move here is quite violent. Okay, although I don't have the reason why the market dip below $8 and then see a massive recovery to $12. So we have to look for reason why the market is moving so erratically. Maybe something else is cooking that we are not aware of. So but basically, if this is going to be a reversal, it does looks good to go in to trade counter trend, means to buy, and hopefully the market sees a more robust reversal going forward. Okay, the other coins are basically not doing very much. A bit of a rebound, but not much. Okay, we can see the Polygon has also rebound off 75 cents, but again now we are losing ground just under the 79 cents levels. Okay, Litecoin similarly, we see a big move here from $61 all the way to $78.40, and then we see a pullback. Again, this is a symptom of a potential reversal, so it does looks good to consider Litecoin if you are in the market and then is adventurous enough to consider going counter trend. So there you have it. I will end here, and I will see you again tomorrow after the market fully open in Europe and later in New York. Bye bye.